Tesla, Piper Sandler analyst Alexander Potts slashed his price target estimates on Tesla owing to COVID-related weakness in the key market of China. The analyst still sees Tesla as an overweight or a buy equivalent, but now sees fair value to $1,035 a share compared to about $1,260 previously. Potts added he still views Tesla as a, quote, cornerstone holding in an advanced mobility portfolio.
In this video, Tesla stock gets absolutely crushed again, with the rest of the stock market to be fair. Elon Musk calls out the scam that is ESG. A Tesla bull lowers his Tesla stock price target, and we take a look at some facts that seem to point towards some anti-Tesla corruption at the highest levels. What a surprise. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. Tesla stock getting absolutely crushed again today, down almost 7% over $50 per share, closing just over $700 per share. I've got a funny feeling this is going to look like the bargain of the century in not too long. Although I'm happy to be proven wrong, the cheaper I can keep buying Tesla stock, the happier I'll be. To be clear, this chaos wasn't just isolated to Tesla stock. The Nasdaq 100 here down over 5% today, getting absolutely eviscerated. I mean, holy hell. The stock market at this point in time is an absolute bloodbath. If you bought the dip, let me know in the comments below. How much did you pay? How many shares? And if you didn't buy the dip, why not? Long-term Tesla bulls, Piper Sandler, have recently cut their Tesla stock price target in a new note, down from $1,260 per share to a new price target for Tesla stock of $1,035 per share. Let's find out why. We are cutting our estimates and price target for Tesla stock to reflect COVID-related weakness in China, as well as higher weighted average cost of capital assumptions in our DCF model. However, we still regard Tesla as a cornerstone holding in any advanced mobility portfolio. Tesla's operational prowess was on full display in Q1. Key financial metrics will probably deteriorate in Q2 due to fixed cost deleveraging. New factories in Germany and Texas will be a drag on margins, certainly will, and COVID-induced downtime in Shanghai due to the fascist, inhumane, and futile lockdowns of the government. Still a head scratcher, that one. Tesla could trade sideways or even downward during this period. Then again, any weakness may prompt new buyers, because in our view, downside due to temporary factors will not detract from the longer term thesis. Absolutely spot on. None of this stuff has anything to do with Tesla over the long term. Although if you're looking at the price of Tesla stock, you kind of wouldn't get that impression. Opportunity. Sorry, I just had something in my throat. Your girlfriend said that last night. What? Tesla's cash conversion cycle continues to impress. In Q2, we estimate Tesla's cash conversion cycle was negative 16 days. In other words, Tesla is getting paid by consumers long before it pays suppliers. This impressive performance led to operating cash flow of nearly $4 billion in Q1. By the way, shout out to the Tesla skying bankrupt clowns from 2019. Cash generation may deteriorate in Q2, but if so, the weakness will likely be short-lived. Absolutely. Tesla's warranty expense is still trending downward. In Q1, warranty expense represented around 2.1% of revenue. Over the last several years, warranty expense has trended consistently lower. This suggests high quality, lower claims, and ultimately, higher margins. Importantly, it also demonstrates Tesla's prowess as a high-volume manufacturer. Tesla's wait times suggest steady demand. Correction? Tesla's wait times suggest absolutely fucking ludicrous demand, but close enough. Wait times for Model 3 and Model Y are still generally 2.5 to 5 months. In some regions, certain variants have much longer wait times, 6 months or longer, and yep, spoiler alert, you want to buy a Tesla Model 3 in Australia right now, you're going to be waiting almost 12 months. That's for all trims. Not even kidding. Currently a 9 to 12 month wait time. Tesla is prioritizing high margin vehicles. This may help offset margin weakness in Q2. Fair point. In Germany, Model 3 wait times are still around 40 weeks, reflecting the Shanghai lockdown. Round of applause for the absolutely moronic, fascist, futile, and inhumane lockdowns, you fucking idiots. Did you not learn from the other? Yeah, let's not go there. Outlining changes to estimates and price target. We now expect Tesla to deliver 1.47 million units in 2022, down from 1.54 million previously. Obviously, this is heavily dependent on how quickly Berlin and Austin ramp and how quickly Shanghai can get back up to full production. Production in Shanghai will be negatively impacted in much of April and May. In the second half of 2022, Shanghai might ramp to 200,000 plus units per quarter, contingent upon COVID. By the way, it's not contingent upon COVID, but the insane government. Berlin and Austin probably can't make up for the Shanghai lockdown in Q2. Giga Berlin is only building around 7,000 1,500 units per quarter right now. Due to lower deliveries and operating deleverage, we are cutting our margin estimates. We are also increasing our weighted average cost of capital by 100 basis points to 13% due to higher treasury yields. These changes result in a new discounted cash flow based price target of $1,035, down from $1,260. And now onto some truly ridiculous data that either suggests incompetence or, more likely, corruption. Here's a tweet from Alexandra, aka Tesla Boomer Mama. Quote, escalating absurdity of financial strength of Tesla compared to credit ratings of Moody's and SPG Global Ratings. Tesla is now in the league of Alphabet, Google's parent company, yet still junk rated. How much longer will this continue? Good question, and let's have a look at the data. If you want to pause the video and run through this in detail, I recommend it, but let's just try to get to the point here. In short, looking at a comparison of a bunch of companies here versus their credit ratings. Green is good, yellow is okay, orange is bad. Now I know we're simplifying here, but that's basically the deal. Notice here Tesla, highlighted with the red lines. Cash to debt, better than almost any company on the whole list. Debt to equity, similar. Debt to EBITDA, similar. Debt to revenue, another leader. Altman Z-score, absolutely slaying it. Yet their rating, strangely, almost inexplicably, is garbage. I mean, literally junk rated. Let's just zoom out quickly to get a sense of what's going on here, okay? You don't need to worry about the numbers, just look at the colors here. Everything here, dark green, aka good. Yet Tesla's credit rating, not good. Can we find any examples here where companies maybe have some not so good things and a better credit rating than Tesla? The absurdity of this cannot be emphasized enough. This is an absolute fucking joke. Now the question is this due to incompetence or corruption? In case you haven't noticed, we actually have a bunch of automotive manufacturers included at the bottom here. Toyota, Volkswagen, you guys can see, right? Notice something. The sole exception here, Honda. One green metric, that's it. Yet, every single one of these companies, bar Ford, has a better credit rating than Tesla, the money printing machine. You know, the companies that are mostly going to be going bankrupt this decade? Yeah, all of them, bar one, better credit rating than Tesla. Yet, far worse metrics. I mean, seriously, you don't even need to be able to read numbers here. Just look at the colors. Something just doesn't add up. I mean, really doesn't add up. Anyway, that's enough of the incompetence or more likely corruption. I'm just kidding, actually. Here's some more incompetence and or corruption. Make sure you're sitting down for this. Here's a rather insightful tweet from not an analyst. Quote, 5 oil and gas companies were added to the S&P 500 ESG index when Tesla was removed. And here's a list of the companies: Marathon Oil Corp, Phillips 66, Valerio Energy Corp, blah, 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 blah. For those unaware, ESG stands for environmental, social, and governance. Investors are increasingly applying these non-financial factors as part of their analysis process to identify material risks and growth opportunities. In other words, the alleged stated purpose of ESG is to help investors find companies that, don't just care about making money, but, making a positive impact, especially environmentally, socially, and in terms of their governance. So far, so good, right? Notice E is the leading letter in this acronym. Environmental, something to consider. So, Elon Musk pointing out. Exxon, by the way, if you don't know Exxon as in gigantic oil and gas company, Exxon is rated top 10 best in the world for environment, social, and governance by S&P 500, while Tesla didn't make the list. As Elon rightly points out, ESG is a scam. It has been weaponized by phony social justice warriors. And Elon going straight on the attack here. S&P Global Ratings has lost their integrity and credibility. I mean, seriously, what an absolute fucking joke. This is farcical. Tesla's been booted out of the S&P 500's ESG list. The company that's done more for transitioning the world to sustainable energy, the environment, than any other company on the planet. They've been booted out of the list the same year that half a dozen oil and or gas companies have been included in the list. This is an absolute fucking joke. Now, the question is this due to incompetence or corruption? And please let me know in the comments below. What do you guys and girls think? Head of Tesla's investor relations chiming in here as well. Shout out to Martin. Hope you're doing well. Quote, it's hard to keep a straight face here. Few of the factors contributing to its ESG score were a decline in criteria levels scored related to Tesla's lack of a low carbon strategy. This is serious, by the way. This is one of the reasons why Tesla's been given the boot. Tesla apparently has a lack of a low carbon strategy. I mean, I just don't even. Martin continues, and I thought pushing the whole industry towards electrification is a decent low carbon strategy. Again, we have some graphics here. Number of electric vehicles produced by company by year. Notice any companies, leading the way here? No, neither do I. So nothing to see here. Let's move along. And a meme from Elon. Picture is worth 1,000 words, and a meme, probably 1,000,000. Despite Tesla doing more for the environment than any car company ever, what is an ESG score? It determines how compliant your business is with the leftist agenda. Bingo! How many of your hires were a virtue signal, not based on their competence and suitability for the job, but ticking a box? Oh, All of them? Great, you win the ESG competition. How many of your hires were based on their merit and their actual suitability to do the job that they're being hired for? Wait, all of them? You're out of the list. Naughty, naughty. Here's a tweet from some lady named Kathy. I don't know if you guys have heard of her. I don't know who she is. But anyway, she makes a great point here, commenting on the fact that Tesla has been kicked out of the S&P 500 ESG index. Ridiculous. Not worthy of any other response. And I think, you know what? Kathy's hit the nail on the fucking head. Let's have a quick skim through this Bloomberg article. And again, please pay attention and think to yourself at every step of the way. 1. Does this make sense? And 2. If it doesn't make sense, what possible explanation could be behind this? Is it incompetence or corruption? Or maybe both? Or maybe neither? If neither, please let me know what else it could possibly be. Tesla loses spot on S&P ESG index due to concerns over crashes and working conditions. And by the way, just for those who don't know, you might think, who gives a fuck, whatever ESG, what a scam, who cares? Here's the issue. There's many funds, institutional investors out there have certain criteria, and if this company doesn't meet this or tick this box, we simply cannot invest. For example, we just saw Tesla's ridiculous credit ratings. There's many funds and investment managers out there who won't touch a stock if it has a junk rating. As soon as Tesla's credit rating is upgraded, there'll be many investors, and I don't necessarily mean retail investors, but institutional investors, big funds, etc., who start buying the stock because it finally ticks the box we need it to tick. Same here with ESG. Since Tesla is unwilling to pander, virtue signal, and appease the woke mob and the leftist agenda, and again, don't get your fucking panties in a twist. I'm not talking about everyone on the political left. I'm just talking about, the people that have decided every single white person is automatically racist. The S&P Dow Jones, this is so funny, says the EV maker, as in Tesla, slipped down the ranks versus its peers. I mean, let's just get into this, okay? The world's most famous electric vehicle maker has lost its spot on the ESG version of the S&P 500 index. S&P Dow Jones Indices says that Tesla's score on environmental, social, and governance standards has remained fairly stable over the past year, but that it has slipped down the ranks against improving global peers. I just don't even. The index provider also cited concerns relating to working conditions and the firm's handling of an investigation into deaths and injuries linked to its driver assistance systems. Now, you guys and girls know, we've been over this, so we're not going to go there again. Again, this itself is farcical. If we look at Tesla's safety record, it's an absolute f***ing joke. This surely can't be incompetence. Oh, this is so hard. Let's just, alright, I'm just going to highlight it so maybe that's easy to read it. A lack of low-carbon strategy and codes of business conduct also counted against Elon Musk's company, it said. Quote, while Tesla may be playing its part in taking fuel-powered cars off the road, it has fallen behind its peers when examined through a wider leftist agenda. Same thing, lens. Margaret Dolt, a senior director and head of ESG indices for S&P Dow Jones in North America, said in a Tuesday blog post. Tesla didn't immediately respond to an emailed request for comment, though writing on Twitter on Wednesday, Musk described ESG as a scam accurately. Tesla also recently criticized ESG metrics as fundamentally flawed in an annual report, Tesla's impact report. Technically this does come out annually, but it wasn't a Tesla investor annual report. It was their impact report. And let's think out loud here. Tesla just got booted off the ESG list weeks after publicly criticizing ESG as a fundamentally flawed metric. What a coincidence! Holy shit! Can you imagine that? I just can't believe it. It's like me getting shadow banned on Twitter the instant I publicly and heavily criticized them about their shadow banning, censoring, and fact-checking practices and the major failures in those areas. That was obviously a total coincidence too. Let's move on. Nothing to see here. Don't think too hard about that. You might discover something we don't want you to think about. Thanks, bye. Dolt wrote that an analyst seeking to identify risks to the company stemming from any controversial incidents identified 2 separate events centered around claims of racial discrimination and poor working conditions at Tesla's Fremont factory, as well as its handling of the NHTSA investigation after multiple deaths and injuries were linked to its autopilot. Both had a negative impact on Tesla's virtue signaling score, she added. Now, by the way, racism is never cool, but I just do want to point out, when a company employs 100,000 plus people, you're probably going to have a few piles of human excrement slip through the cracks, at least initially. The prevalence of psychopathy in the general population is about 1 in 100 people. So do the math. How many psychopaths do you think Tesla has unintentionally hired? It's kind of important to understand this. The S&P 500 Leftist Agenda Index is tracked by at least 16 exchange-traded funds, according to S&P Dow Jones website. As I was saying earlier, some funds need to tick the box and they'll invest in it. There were $11.7 billion in assets assets indexed to S&P ESG gauges broadly at the end of 2020, according to an S&P survey. Quote, this exclusion will lead to some forced selling since some funds benchmarked to the ESG index cannot hold the stock now, said Gene Munster. Shout out to Gene. Tesla fell as much as 8% on Wednesday, and Munster, with his crystal ball, attributes about 1/3 of the drop to news of the index exclusion. Kristen Hull, founder of Nia Impact Capital, a sustainability fund in Oakland, California, has been pressing Tesla to address worker issues, and she said she was relieved there was finally accountability. Yeah, kicking the company that's done more to transition the world to sustainable energy than any other company on earth out of the environmental blah blah blah. Sorry, Kristen Dull. I don't think this is even worthy of a response. This move signals to other companies that the leftist agenda and virtue signaling matters, she said, and that there will be material, financial implications if you do not conform to the one true narrative and push our agenda. But the decision didn't sit well with some other clean energy supporters. Oh, fancy fucking that. Quote, this exclusion undermines the concept of ESG as a whole. And you know what? Zach Stein, whatever. Nail on the head, brother. Absolutely nailed it. That is the line, sums this up perfectly. This undermines the entire concept of ESG, there's no question. But the entire concept of ESG, as Elon pointed out, has been hijacked by social justice warriors. It's not really about what it says it's about. Fancy that. Bit of gaslighting. Who'd have thought? Chief Investment Officer at Carbon Collective, a climate change-focused online investment advisor based out of Berkeley, California. Quote, the number one issue in ESG is climate change, and the company that is the leader in one of the most important solutions to climate change, which is electric vehicles, is now out, while companies like ExxonMobil, which is one of the biggest contributors to climate change, is still in. The S&P Virtue Signaling Index gauge does not include some oil companies. Isn't it stunning that it includes any? ExxonMobil Corp is one of the largest companies in the benchmark, and the index recently added Marathon Oil Corp and Baker Hughes Co., more oil and gas companies. The objective of the index is to, quote, maintain similar overall industry group weights to the S&P 500, while enhancing the overall sustainability profile, which is exactly why Tesla got booted and a bunch of oil and gas companies were added. Got us fooled. That makes total sense, you fucking idiots. Raymond McConjob said, a spokesperson for the S&P. S&P has other gauges that exclude oil companies, but the S&P 500 ESG index is meant to be broad-based. Oh, fuck my life. You guys do understand what's going on here. This is the exact same shit that's happening with quotas for hiring. We don't have enough people with this skin color, with this sexual identity, with this gender, with this body mass index, with this colored hair, with these freckles, who believe this, who say this, who've done this. We don't have enough amputees. We don't have enough people on the autism spectrum. We don't have enough people who are religious. We don't have enough people who aren't religious, but same shit, different flavor. It's pretty clear that companies included in the ESG index aren't actually being included based upon their merit, but instead meeting quotas. We need some more oil and gas companies on the index, even though they're totally fucking up the planet and they've got nothing at all to do with the environment in terms of helping it at least, but we need more oil and gas companies here to whatever. What did they say? And sure, the index is broad-based, aka inclusive. So to paraphrase Kathy Wood, what an absolute fucking joke. It is my personal opinion that this isn't due to incompetence, but instead brazen corruption. But of course, I'm just some idiot on YouTube who doesn't know anything about anything. So, hope you guys and girls have enjoyed this video. I mean, fuck's sake, I just can't eat this. I can't believe this shit is real life. Like, I'm gonna look back in a few years and like, did this even happen? Did this really happen? It did? God damn. And lastly, don't forget, you can join Patreon with the card in the corner or the link at the pinned comment. You'll gain access to well over 100 exclusive Q&A videos, dozens of other exclusive videos as well, including some recent content on my latest real estate moves, plus my 10-year Tesla stock price targets and plenty more. So, I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.